All right, Ron, we are back with another week of Ask Ron.
Okay.
Got several questions this week. First one, our friends Tony and Angie. Do you require that the tenant buyers get any kind of renter's insurance?
No, I don't require that. I might just suggest they do, but it only covers their furniture. It doesn't cover your house.
Okay. Having a hard time pronouncing your name. I'm sorry. Evgenii. I'd like to know if there's a way to do the pretty house approach or apply another similar method to deal with small multifamily properties, i.e. 2 to 4 units.
Yeah. You do the same thing you do on single family houses. Nothing really changes.
Okay, so she's saying I'm not talking about buying and renting. I want to do lease-to-own approach. So,
Oh, no. Can't do that on a 4 unit because you can't divide up the 4 units into one unit that they can buy. So that's the problem with a 4 unit. You don't get a big non-refundable option deposit. You just get cash flow. That's all.
All right, so sandwich owner financing is what she said here.
If you do the whole unit, yes.
All right, Brian from Colorado says, what do we tell the sellers about having their insurance policy when we close? Do we tell them to cancel it or change it to something else?
You tell them to cancel it, but not until your policy is in place with the lender. And you know that your insurance company will probably take care of that. But if it comes up, you do tell the seller to cancel their insurance. Maybe give you 10 days before they cancel it.
Francois from Canada says, if I buy a property in the USA from a seller using a wraparound mortgage, is there the same due on sale clause risk that is present when you purchase using a subject to agreement?
Yes. All loans in this country have that due on sale clause in them. So what? Don't worry about the due on sale clause. Bank ain't going to call a loan due. The last thing they want is a house, especially a house that somebody's making payments on.
So he asks if how can you protect yourself from the due on sale?
Okay, write in your CYA letter. That's cover your assets letter that they're going to get signed when you buy. It says that the bank could call the loan due and you're not responsible if they do. Okay, and when you're selling on a wrap, that same language is disclosed within the wrap that there's an underlying loan. Now, when you're selling with a wrap, if your tenant's paying you, you better darn sure be paying that payment because that is a legal issue they can probably win on if you're not. But when I'm buying, subject to or on a wrap, loan stays in the seller's name and there's not a darn thing they can do if I don't make that payment, except foreclose on the wrap. They can't even do that on the subject to because they're not owed any money. You're paying their bank directly in both cases. I don't know if you got that or not because it went by pretty fast, but you don't need to be worrying about protecting yourself because you're not guaranteeing any debt. You're not applying for the assumption at the bank. You don't do that nonsense. And just remember, when you're not the one guaranteeing debt, there's nothing they can do to hurt you except foreclose on the house, and they're not going to do that. Believe me, they're not going to do that. In fact, if you ever get a notice that they're going to foreclose on the house, and tell them, don't bother. I'll just deed it to you if you want to pay the closing costs. So what have you lost? Nothing. You made money during the whole time you had it before they decide to call it due, which will probably be never. They just don't want houses. They got enough of them. Just don't make a big deal out of it. You don't call them and ask them for permission. You don't write them a letter. By the way, some students have done that and showed me a copy of the letter where they cited the Garn-St. Germain, the Federal Depository Institution Act, right in it. And so they told my student, no, we can't call a loan due just because they can call it if it changes hands, but that don't mean that they're going to call it. I'm sorry, I got lost there. The Garn-St. Germain Act applies when you're putting your house into a trust. Okay, they cannot call it due if you're putting your house into a trust. Now, and just for the record, they don't know who the beneficial interest is in the trust, so that's in your filing cabinet at home, and that could be changed at any time. Just saying.
All right, Willie from New York. I've been going around trying to find for sale by owner signs, and I have found around 40 signs of houses for sales.
Wow.
But the signs are always of a real estate agent.
Well, that's not a for sale by owner then.
Is there any way I can take advantage of these properties I find with these signs?
No, because you don't buy pretty houses through real estate agents.
If not, is there any way I can use real estate agents to help me out in the pretty house term business?
No. You got to get it in your head. Real estate agents and terms is a plus and a minus magnet. Always. No, you don't. They don't ever put them together. Very rarely with somebody with a house that they've got listed, even talk about terms. And if they do, it's only because they can't sell it. So don't go looking for listed properties. You're wasting your time. You go looking for FSBOs. Do what I taught you to do. Look for FSBOs. Get them to contact you. There's so many ways to do that. And if you can't find any FSBO signs, that don't make any difference. You got about 25 other ways you can go, things you can do to get sellers contacting you. And by the way, they're always more motivated when they're contacting you than they are when you're chasing them down.
Okay, Rick from Texas says, when doing a seller finance, does the seller avoid capital gains or 1031 exchange?
They're selling their residence, and they can't do a 1031 exchange. Capital gains they will get, but I mean they got, I don't know the number, but I think it's about $600,000 or $700,000 house they can sell without having to pay any taxes on it. Then if they do pay taxes, it's going to be long-term capital gains. But I don't know. Just tell the seller, anytime a seller asks you a financial decision that sounds like it should come from a CPA, you should be saying, that's probably a question for your CPA. That's probably a question for your attorney.
So I think what he's asking here is if he could use that as a selling point, that if you finance it over 2 years, it would be long-term and not short-term capital gains.
That question don't make any sense. Long-term capital gains start after they've owned it a year if they sell it anytime beyond that. But this is your residence. It's not taxed like rental properties. It's your residence. So they may not have any taxes. In fact, they probably don't have any taxes unless they got a massive gain on the house. And even if they do, it is long-term capital gains. Don't know how better to explain that.
All right, Perzina from Georgia says, can a homeowner with a bank-owned loan do a terms deal on their own primary home?
Yes, you can, but you know, it's not the smartest thing for you to do because they still got that due on sale clause, and you got the chance that the bank's going to call the loan due. I would do a lease option if I were you, and now the bank can't call the loan due, and you still control the house because it's still yours. And if they don't pay, you can evict them rather than have to foreclose on them. So the answer is yes, you can. But you want to get a rather large down payment so you don't have to worry much about the tenant buyer.
All right, last question, Patrick from Florida. What if my deal is funded by a private loan and is due in 12 months, but my tenant defaults near the end or just still doesn't have their credit in good standing to qualify for a loan to cash me out?
Then you get an extension and never do a 1-year balloon again. And on Planet Ron, we get money from human beings, not from loan sharks. Those aren't private loans. Those are hard money loans. And there ain't no 1-year balloon. Don't ever sign on those again. And in fact, you made the mistake of abiding by the rules that the lender or the broker put before you. In my world, we make the rules. We don't let anybody tell us what we got to do. So the rules are between you and your private lender. Don't even know what lending is until you tell them. And even when a rehab, I put no less than a 2-year balloon in it if I knew I was going to rehab it. And you can get as many years as they're willing to give you. Just remember this. They don't want the money back quickly or they wouldn't give it to you now. They want it out there earning 7, 8, 9% interest. They don't want it back. I mean, they want it back eventually. But you know, it's easy to get under the impression that they want it back quickly. It's not the lenders, it's the brokers who want it back quickly so they can keep turning it and make more money every time they turn the money. So there is no such thing in the private lending world as a 1-year balloon. No need, not necessary. And but answer your question was they either extend it or they get the house. that simple. That's all any lender can do, as long as you're not personally guaranteeing that debt. And I hope you didn't guarantee that debt with that 1-year balloon in it. And if you did, you're just going to have to work with them and deal with them until you can get it paid off. And hopefully they'll extend it. They might want to charge you more points to extend it. So that's the trap you're in. Don't let yourself ever get in it again. They say education is expensive. Compare it to ignorance.
All right, Ron, that's all our questions this week.
Okay. All right, guys. I hope you're on our podcast by now. That's the thementorpodcast.com. It's every Wednesday. It's free. Register for it. You get all the archives. Got some really good people on that thing. And we're in the middle of our master class now. I know you've heard about that already many times. Getting toward the end, actually. In fact, next lesson is going to be lesson 17. And just so you'll know, once I get through with those lessons, and there'll probably be 20 of them, once I get through with them, they're not going to be available for you to go back and get all the ones we've already done. Okay. So if you're going to do that, you better get on there now. Go get them now. And then when we're through, we'll give you a chance to go back and get the ones you don't have. So after that, they're not going to be available. So, that's a warning. Get them now. And also, I got, December the 3rd through the 5th is our summit with a fancy name coming up, and it's free. Go to ronlegrand.com/summit and take a look at it, because we got some really powerful people coming to share all kinds of income streams with you. And of course, I'll be on there as well. So 3 days of it. It's all virtual and it's free. So go get on it right now. So I'll see you next week. Get some good questions in here. This whole thing is about your questions. So the more we get, the more you're going to get out of it. See you then.